Good morning, guys. It is Monday, April 8th, 2024. This bathrobe business. I've already run out of coffee, but I still have the news. So a few major stories in the market I'm going to talk about today. The first we're going to cover is Janet Yellen's statements in regards to China. So Yellen has just come back from a trip to China, and she said that exports on green energy are not out of the question. The Biden administration is still keeping that idea in place as a possible weapon to use against China because they deflate their products, market, etc. This is kind of a stupid story. Not stupid because of the fact that it could happen or probably will happen, but just stupid from the fact that this is how we solve problems in the United States, I feel like now. Instead of making systemic changes into how economies are run, we do stupid stuff like this. So why tariffs are dumb? It's not that you shouldn't try to protect your own economy. It's just that usually cheaper products do help your economy. And if another country is making them cheaper than you, then you're probably doing something wrong. There's probably half a dozen, if not 100 different regulations and taxes in the United States that any administration can cut in order to spur the economy. The regulatory hurdles for some of this stuff are massive. So if the United States wanted to compete with China, instead of putting tariffs in place that really don't help the American consumer, they could cut costs, they could cut taxes, they could cut regulation, they could get rid of half a dozen obstacles that are in the way for EV sales. They're not doing that. All they're doing is they're going to make the passing the cost of EVs onto you rather than try to have you benefit from the fact that EVs could be better for you. So this is a stupid move. It was stupid when the Trump administration was doing it. It's stupid now, and it always will be stupid, because if our economy operated perfectly and we were still having to go up against China and they were price fixing and reducing the cost of their labor, etc., then you could discuss tariffs. But until we reach that point, we're nowhere near that. There's dozens of regulations they should be cutting. There's lots of taxes they should be cutting, but they're not doing that. Instead, they're going to just pass the cost of owning an electric car onto you, because we all know what this is about. China is producing better and better electric cars, BYD being the flagship of all of those, and they are going to come to the U.S., and this is an obstacle that they're setting in the way for those companies to come to the United States. Cheaper electric cars are better for the American people. That's just a fact. If you can buy a car cheaper than you would have a year ago, that's deflationary. That's actually good. But they're not going to allow you to do that because they have to compete with China. So, stupid story. Just thought I'd throw it out there. Next story we're going to cover is gold. So gold is continuing its march up. It is currently at 23.52. It hit 23.55 just a few minutes ago. I don't see how it's not going to hit 2,400 probably within the next couple weeks. At the same time, crypto is up as well. So Bitcoin did touch 7,200. It's now at 71,995. So both of those are increasing. This is concerning because both of those are quote-unquote reserves that are supposed to be tells of inflation in the system. The fact that both of those are on a march up is not a good sign. I think inflation is much hotter than what we're getting reports of. Now, we've already got PCE. We still haven't gotten CPI, but I think that data is going to be hot. But even if it's not, I think there's powerful inflationary pressure in the market that's not being reported or being tabulated in the official reports. So those two are not isolated incidents. The fact that they're both marching up is a sign. I've talked about gold ad nauseum. I haven't talked as much about crypto because it's not something I'm as well schooled in. But the fact that both of them are conversely moving in the same direction gives you an idea that these aren't even competing forces anymore. A lot of people have said that gold and Bitcoin are competing because you can invest in gold or you can invest in crypto. But right now we're seeing both of them marching up, and they're both reserves against inflation. So this is not a good sign. Even though I made a video the other day that I think the economy is doing strong, and I think it is, I think that this is some sort of force that we're not seeing. I think inflation is still very, very high. In other news, this isn't one of the ones I was going to cover, but dollar stores are closing across the United States because inflation is just too much of a pressure on most of them. I think there was one national chain with over 300 stores that has now gone under. Dollar General has reported struggles with that as well. So there's definitely powerful inflation that I think we're not seeing, and it's something we need to keep an eye on because of all the dark forces that could play into a bad economy. I think that's the one that is the only one I could see that could be a factor. Next story is this is a company I'm not familiar with, but it's Pollo Campero. It's a chicken chain. I guess they're in California, but they're across the U.S. We don't have it here in Utah. But they are actually redesigning their entire store in order to avoid costs of labor. So this is in some response to the California $20 minimum wage, but I think it was just the kind of catalyst needed to restructure all their stores. So I just think this is interesting because from a business perspective, as a business owner, I think this is a smart perspective to take of how do you cut labor, how do you cut labor costs, I should say. And so what they're doing is they're redesigning their stores because they're finding that their employees aren't being productive or efficient because they're walking around the store too much. So by redesigning their stores, redesigning the workflows of their kitchen, they're able to get more productive workers because the workers just don't have to zip around as much and can focus on actual work. I think this is very smart for anyone in any industry, whether it's service, whether it's manufacturing, is always looking at lean manufacturing, right? The Kaizen method, the Toyota method of manufacturing or producing a product. And that's exactly what they're doing. Last story I'm going to cover is Blackstone. So Blackstone is buying up a real estate REIT called Air. This is a company that manages 76 different complexes across the United States, mostly in coastal areas, so Los Angeles, Miami, Boston, for a $10 billion price tag. Blackstone, BlackRock, they've been getting into real estate more and more. This isn't a surprise. This has been a move that's been happening since pre-COVID, honestly. It's just COVID really just spurred it on with rises in real estate costs. And so this is just continuing. Now, currently in the United States, prices have begun to come down because the cost of the cost of renting is 60% lower than the cost of owning. But I'm sure that moves like this from these large hedge funds are actually going to raise costs nationally because oftentimes what they do is come in, take over a project, and then start raising rates. Now, so far, this is mostly for already areas that are incredibly expensive, but these kinds of moves are happening all across the United States. That's pretty much it. It's, like I said, not a very fast-paced day. I don't have too much to report on, just a couple of those news stories. I'll see you back here tomorrow, so you guys have a productive day. Thanks.